Special coverage from the New Orleans Investment Conference is brought to you by First Majestic Silver Corp. There's no substitute for silver. Hello and welcome back to Soar Financially, here from the floor of the New Orleans Investment Conference. My name is Kai Hoffmann, I'm the HJR mining guy over on X, and of course your host of this channel. And I'm being joined today by none other than Mark Skousen. He's America's economist. He's also the founder of FreedomFest. He's an accomplished author, as you can tell right here with his book. But he's also a university professor at Chapman University down in California, and I'm really excited to have him on. We've never had the chance to speak, Mark. It's the first time we're meeting as well, so I'm really excited to have this conversation today.
Kai, nice to meet you. I've been to Germany, I've been to 81 countries, and German is hard to learn. There are so many dialects and so many different, it's almost as bad as English.
Yeah, we don't make it easy. We have it feels like 10 different words.
You have your verb at the end and all of that stuff.
Very different. Like, it actually messes me up speaking German at these conferences.
Oh, really?
Because I'm thinking in English, and then somebody speaks to me in German, it completely throws me off. Despite being German, it's my mother language. It just completely throws me off. Yeah. So, no, really appreciate you being here.
Thank you.
We got to talk, real talk. It's time for some real talk. We need to talk about the economy in the US. I'm curious what your assessment is initially. What's the assessment of the economy and the financial markets from your point of view, Mark?
So I try to break down the economy because I don't think you can just say, oh, GDP, it's going up 3.9% or 8%, so that's really good. The only thing that's going up is consumer spending. And I don't know how long that's going to last. Business spending has been moribund. It's been growing at a much slower rate than consumer spending. It's still going up, but barely. And in the last quarter that we have of B2B spending, it went down 5.9% in real terms. So that concerns me. Now that may be due to the tariffs, because what you had with the tariffs is a lot of buildup of inventory in the first part of this year due to the Trump tariffs. And now they're being reduced, if you will, or used up or spent. So that may be influencing the decline in business spending. But it's business spending, not consumer spending, that drives the economy. This is a concept that I have emphasized over and over again as an economist. The economics is often focused on GDP, which is final goods, the value of final goods only. So it leaves out the supply chain, which is all B2B spending. So the supply chain is bigger than GDP itself. So if you add it together, it's called gross output. It's a government statistic, but it's kind of buried in the data. Nobody talks about it. You may have never heard of
No, it's like you're actually one of the first guests to bring it up. Yeah.
Yeah, GO. And GO, again, is not growing like GDP. So that suggests a slowdown or a recession. This is why the Fed is cutting rates. I mean, look at the labor market. The labor market is really slowed down. My senior students are not getting job offers like they used to. So this is a real problem, and it suggests that maybe the stock market kind of topping out and having a correction here is an indication that things aren't as rosy as the GDP statistic indicates.
Yeah, no, you bring up a lot of interesting points that other guests haven't really mentioned. GEO is one of them. Mm-hmm. We have to talk about that, the underlying statistics here, the employment statistics, AI statistics, where it's the AI that's driving unemployment right now, apparently. But I picked up an interesting term watching CNBC this morning, AI washing. Meaning
AI washing.
Using AI as an excuse for layoffs and efficiency increases and things, but they wanted to lay off the people anyway. Do you have a theory on that?
I think there's an element of that, but there's also the federal government under Trump. They are cutting the labor force there. So that's a new, they have to look for jobs and so forth. So yeah, that's an indication of a recession or a movement toward recession. And it's very real, and AI is actually increasing productivity. But it may also mean, hey, let's hold off hiring people, because maybe we don't need to hire people because we have machines that would do what people used to do. Now, in the long run, that's always been positive. I'm not a Luddite, and anyone who is a Luddite is missing the boat, because every time a revolution occurs, I mean, the horse and buggy, that was a very big business, and it virtually disappeared because of the automobile. Did the economy, was it destroyed because of that? No, not at all. So we need to be optimists. We need to have faith in the capitalist system that it will right itself.
Yeah, humor is a little theory that I have. Or not a theory, but an idea I had developed during one of the interviews was that President Trump was recently traveling to Asia, doing a lot of trade deals, tariff deals, but one thought that struck me was that he's using AI and tech supremacy to sort of secure America's status on the planet. Right? It used to be military might before. I'm feeling he's using AI and tech supremacy to a degree to reinstate that. Yeah. To a degree, and maybe cement the position of the US dollar as well. I'm curious if you have any thoughts on that, if that AI is being militarized, but in a different sense.
Well, it certainly is. I mean, the contracts, Palantir is a perfect example where they are having all these contracts with the military, so AI is playing a major role there.
Yeah. No, I don't mean like AI as a military weapon, as a physical or so, but using AI and access to AI, like computing chips and graphic chips, as sort of as a stranglehold on the partners, right? Using that.
And the U.S. still dominates that field. I don't know for how long.
Yeah.
And so, yeah, I think it is a bargaining chip that would be very helpful. But, you know, to build these chips and stuff like that, you still have to have these rare earths, and China controls the rare earths, at least temporarily. We're trying to expand that in the U.S. and with our allies. But they both have bargaining chips. So President Xi is not an easy negotiator. And I think Trump is a little frustrated by the whole thing. That he's met his match with President Xi and probably not too many other people, but the Chinese feel like they hold all the cards.
But it seems like they're having fun together because they seemingly respect each other because the conversations seem to be going well. But it's they found...
Depends on the topic that you bring up. You
right?
want to bring in human rights violations or the suppression of religion in China, you're not going to get along. Believe me, there's a lot of restrictions. I mean, I won't go to China. I won't go to Hong Kong at this point because I don't want to give them I don't want to validate what they're doing.
No, fair enough. Makes a lot of sense. Coming back, like you're one of the first guests here the last 2 days actually using the R word, recession. It has been widely ignored and it has disappeared from mainstream media again. Let's revisit that topic. What does a recession mean for you? We all know the textbook definition.
Yeah, two quarters in a row of declining GDP. I look at business spending as the biggest sector of the economy. It's 60% of gross output, GO, because that measures spending at all stages of production. And that has slowed down. It's not actually a recession yet, but there's all these indicators of the labor market and so forth. Plus you have how do you measure inflation? Does the CPI really work or the GDP deflator? I'm not sure it's that particularly accurate. I mean, the CPI says that beef prices increased 10% in the last year. Really? I mean, have you been to the grocery store? Ground beef, steaks are double the price they were a year ago. So I don't know where they get some of their statistics. And that's the basis of deciding, because we live an era of permanent inflation. Since World War II, inflation is permanent. Every year it goes up, may not go up by much, but it still goes up every year. And this has been a universal system since we went off the gold standard. So we lack that discipline, which I think is very serious. There's another thing that needs to be raised, and that is interest rates. The interest payments on the national debt are growing faster than the debt itself. And that's because interest rates have been going up, at least recently. So that's a key factor that might lead to a crisis and another cause of recession and pulling back. The lockdown itself is pulling back consumer spending, and if you don't have the food stamp program and all of these welfare systems and stuff like that, that's going to cause a temporary recession as well. So I think that's a very real possibility. But I will say the American economy has been more resilient, and I think it's due to the technology and the advancing technology and the excitement about that and the spending and the investment in data centers and things like that. It's all very bullish, so we don't have a severe recession type of situation. We don't have a financial crisis like we had in 2008 and 2020. So we could go in that direction, but we don't see it yet. I'm still fully invested, as a matter of fact. So
there you go.
Not, but I have my stop orders in place, and we're in a pullback, and we'll see how far that goes.
Yeah, no. When it comes to that, we need to talk about the S&P 500 at record highs. The economy and the markets are completely disconnected. It seems the underlying economy is doing very different things than what the market sort of tells us. Although earnings seem to be doing okay. Palantir came out with earnings today, although it got punished afterwards. I haven't had a chance to dive deep into the numbers, but the stock was down 8%. I think the market is quite nervous right now as well. Is the market ready for a pullback?
Yeah, I mean, I often have said that technology stocks can fall in half and still be overvalued. So, I mean, the high PE ratios and so forth, and when you've had recessions, technology stocks do plunge. The stock market takes the stairs up and the elevator down. That's a quote from the Maxims of Wall Street.
There we go.
Yeah.
You just touched on the government shutdown as well. From an economist point of view, like what's the impact? What should we be expecting? It's now a record shutdown because as far as I know, we haven't reached an agreement today. So it is a new record apparently as of tomorrow.
Yeah.
From an economist point of view, like what are the implications?
It's so funny. I saw a headline in the New York Times, federal government shuts down. So I sent it to all my anarchist friends who said, oh my gosh, this is the headline they've been looking for their entire lives, no more government. But I do think it's healthy to go through this. It demonstrates, it forces both the Republicans and Democrats to work together. You go back in history and government opposition parties did work together. The most two influential senators of since World War II were Senator Orrin Hatch of the Republican and Ted Kennedy of the Democrats. They passed more legislation than any other, and they worked together on a regular basis to get things done. And there's something to be said for that. But in today's world, I mean, Supreme Court justices have to be approved like 51 to 49 when they used to be approved 90 to 10 and that sort of thing. It's really a sad commentary where people are judged by the party rather than their principles and their positions and the policies that they practice. So the divisiveness in America and around the world is being encouraged by the divisive language, the labeling, the constant left, right. And there really is no left or right. There's just good policies or bad policies. Why can't we look at it that way? Why do we have to label people? So I avoid that as much as I can. At my FreedomFest conference, I encourage people to talk about best solutions, not who is right, but what is right. It goes through one ear and out the other. Then they're suddenly attacking each other. I'm good friends with the publisher of The Economist. They use left, right constantly. And I said, you know, it's time to stop and just say, hey, what's a good policy? Why is this guy far left? Why is there a German, I don't know which of the party it is, but they're always called far left. Well, are they really far left? What does that mean? It's just a smear tactic to say, oh, you shouldn't vote for them because they're extremists. Well, how are they extreme? We do this all the time.
We're missing data, of course, because of the government shutdown.
Yes, indeed.
How important is that? The Fed just said last week we're driving in fog. Well, I say, well, get some headlights. Get some guidance, and you can figure this out. But how important is the lack of data moving forward here, maybe until the end of the year?
Well, maybe it'll be refreshing. I mean, I'm good friends with the Bureau of Economic Analysis because they do the GO statistic as well as GDP, and they use the consumer price index and all of these kinds of things. Bureau of Labor Statistics, the CPI is required for Social Security payments as to what that will be and so on. But there are private markets that continue to do measurements, and corporate profits are still being reported, and that is a leading indicator. The Conference Board is a nonprofit organization that puts out the 10 leading indicators, and those are all private statistics. So the data is there, in my opinion. I don't think the Fed can use that as an excuse. But I will find something interesting. So the Atlanta Fed, which is famous for predicting the next quarter's GDP, so for the third quarter they're predicting like close to 4%. But the St. Louis Fed, also another regional Federal Reserve Board bank, they put out their own statistic and they say GDP is going to go up 0.6%. I mean, that's a huge difference. That's a
massive gap, yeah.
A huge difference. So it'll be interesting to see what actually comes out in the data. But you're probably right, we're going to get that delayed because of the layoffs and stuff. But I'll tell you, the layoffs on the airlines in particular are a serious problem because more and more planes are being delayed for hours. People and TSA has these 3-hour lines to go through the TSA.
Don't get me started. My trip here.
Was it really bad?
Yeah, I came through Houston. That made national headlines.
Oh my gosh! So how long were you in line?
Only 2 hours.
Oh,
only.
Yeah.
And I had a shorter line, but the other terminals apparently it was 4 to 5 hours.
Oh my gosh!
It was awful. Yeah, and then delays coming in because of lack of.
I'm hoping this, of all things, should say a wake-up call to Democrats and Republicans together. Say, hey, it's time to move on, and you resolve it, and then you deal with these other issues.
I want to come back to something you said earlier. Consumer is still spending.
Yeah.
How is the consumer financing it? Wage growth is minimal in comparison to CPI, meaning 5% versus maybe 8%. How are they financing it?
Well, I think that's where the difficulty is because credit card use, you can extend it for a period of time, but at some point you have to pull back or you declare bankruptcy. So that's why I think there are more and more indications that the resilience of the American economy is reaching its limits. And so there's really nowhere to go because it's only the consumer that's increasing. Business spending is much more conservative in their approach. Now I will say that business has one thing going for it. All the major corporations have huge cash positions. I mean, they're like Warren Buffett has $300 billion in cash. He's recognized that we're near a top at some point. Maybe we've already reached it. And if you look at Microsoft, if you look at Apple, if you look at Amazon and see how much cash they had, they learned this from the 2008 financial crisis because companies that had retained earnings and maintained the cash, they survived. And all the major corporations have found that. So maybe that's part of the resilience and why we can bounce back and do as well as we can.
I want to quickly touch on the subprime crisis. Like the auto lenders are starting to falter, a $1.7 trillion market. How closely are you following that space?
The private credit markets.
Yeah.
Yeah, it's a possible problem because one of my recommended stocks in my newsletter is Main Street Capital, which is a business development company, and they do equity and debt financing with the small companies that are not publicly traded. And so they have over 100 companies and so on, and they're considered the best of the business development companies. But even that stock dropped 10% in a month, fearful. But it isn't, because it's the best of the best. In today's market, it didn't go down at all, which is pretty good. You know, I had Goldman Sachs went up today. Oh. I mean, it's just pretty amazing. So some of my stocks actually did pretty good. Amgen went up.
Interesting.
Yeah, the biotech. That's an area that's been has not participated in this tech boom. Yeah. Is the biotech and the drug companies. Some of them have, but many of them haven't. The big pharma companies have really struggled, and so maybe that's where to put your money while you're waiting for the markets to recover.
I was going to say, like, where else do you see opportunity? Like, what sectors are of interest? What niches should we be looking at?
Well, I do think Robert Prechter talked today about how gold seemed to have topped out, and we may have a period of time where there's really not much going on in gold and silver, but uranium does look like it could continue to grow. I mean, they fell just like everything else, but I like uranium stocks. It just seems like nuclear power is back in action because of the Trump administration.
$80 billion deal between the Department of War, I think.
Yeah, so the fundamentals, the fundamentals look strong there, much more than gold and silver. Although silver is involved with the data centers and stuff like that, so that may hold up as well. So there are some commodities out there. I do think that financials, other than, the problem with that private credit market does concern me, and to the extent that the big banks are involved in that, that could be a problem, but they never really rose, so financial stocks could be an area that could survive, or there's an old quote from Dick Russell, who hid the Dow theory letters for many years, and he says, in a bear market, the winner is he who loses the least.
Flat is the new up.
Yeah, yeah, good.
Right?
I could use that.
There
Maybe
you
I'll
go.
Quote you.
Just make sure, Kai Hoffmann, Soar Financially.
Yes, Kai. Good idea.
Mark, one last topic I quickly want to touch on. We haven't really drilled on it. It's just inflation. We touched on tariffs and things like that, but where do you see inflation going? It's been trending up for the last 6-7 months here.
Yeah, despite the Fed had a tight money policy after a very loose monetary policy, so you have a tightened policy, but it hasn't really kicked in. And one of the reasons is the tariffs, because Trump has made the mistake, in my opinion, of imposing tariffs on inputs, okay, in the supply chain. So you put on a 50% tariff on steel and aluminum, well, that's not a consumer good. That's not a finished car. Yeah. That's what you use to build a car, and construction and manufacturing needs steel and aluminum and so forth. So you've raised the cost of production, and they're going to try to pass that along. They may not be able to do as well, but you're still going to have an upward pressure on prices. So I think this is why we have a stagflation type of environment right now. And then, the president is simply ignoring the data when he says that food prices have declined, and declined a lot, he says. Well, come on. Have you been to a grocery store? Yeah. I mean, beef prices have doubled in the last year.
Yeah. No,
I don't know about Germany and Europe and so on, but I think the cost of food and rent and everything is still going up.
Absolutely.
We've entered an era, I do something with my students, show them a chart since 1776 of inflation in the United States that's measured by the CPI. And it goes up and down, up and down, up and down, pretty stable overall. The only reason it goes up is war, and after the war it goes back down. But after World War II, it kept going up. And I say, I give you 5 reasons for it, okay? Number one, maybe we have an military-industrial complex and never-ending wars. That could be a possibility. Number 2, the creation of the Federal Reserve is an engine of inflation. Number 3 is going off the gold standard. Number 4 is adopting Keynesian economics, which is constantly running deficits, and that's okay according to the Keynesians. And finally, the Bretton Woods Agreement that made the dollar a fiat currency, the world's currency. Which of the 5 is the most important? And the answer is all of the above.
All of the above. E.
Yeah, all of the above.
Fantastic.
It's a fun exercise with my students. They love it.
Probably just hour-long discussions.
Yeah, it's a whole class.
Yeah, fantastic.
Yeah.
No,
So
really
inflation is not going away.
You host online classes as well? Can we dial in and watch?
No. It's Chapman would require you to pay a lot of money to be part of the classroom environment. But we do have a Zoom. I mean, for students who are ill or something like that, they can watch it on Zoom. And I suppose occasionally somebody can, we'll let you listen in to one class, but you can't take the entire class without being a student.
Yeah, fair enough. A little taster here and there, but not
exactly.
much else. So really,
everybody does podcasts, and you do these things and stuff like that. I'd rather be interviewed than doing all the interviewing. That's a lot of work.
Tell me about
it. Together.
And especially, it's like so much going on right now. It's really difficult to even pinpoint a topic because they're all interconnected, but there's so much. We haven't even talked to the U.S. dollar yet, and the role of the U.S. dollar moving forward.
The dollar's been declining.
Exactly.
And that's why gold and silver, one of the reasons going up. And by the way, we haven't mentioned Argentina, which I think is a hopeful environment. When Milei won that midterm election, that was a major breakthrough for him. I think he lives 9 lives. He's doing a lot better than I thought.
Yeah, absolutely. It was good because mining companies are involved in Argentina. We're all cheering it on, and we love seeing the reforms. So it's fantastic. Mark, what a great pleasure having you on the program. We'll need to do this again virtually, maybe early next year. Catch up, see whether anything's changed, right? And appreciate your time. Where can we send our audience to follow more of your work?
So markskousen.com is my website, and freedomfest.com is where we have our annual conference. So we call it the World's Fair of Liberty, and we hope people from all over the world will come to Las Vegas July 8th through the 11th. to the Caesars Forum Convention Center. It's going to be very exciting.
Nice, amazing, fantastic. Thanks so much for joining us.
All right, my
Looking
pleasure.
forward to the next one. And to everybody else, thanks so much for tuning in. I hope you enjoyed this conversation here with Mark Skousen. I tremendously have. Always love chatting with people first in person, then virtually. It's always much better.
Sure.
Much better. And if you enjoyed this as well, please hit that like and subscribe button. That way we can bring Mark back if we get the positive feedback that I'm expecting we'll get. And hit that subscribe button as well. Helps us out tremendously, and we much, much appreciate it. Thanks so much for tuning in. Take care out there.